Good afternoon, boys and girls. Welcome to the weekly economic update for Monday, April 18th. I hope everybody had a good weekend. I hope y'all got some good Easter eggs and chocolates and all the good stuff that usually is around this holiday weekend. I was a little miffed that I only got to get 2 boxes of Cadbury eggs, and I'm a bit of a sweet tooth. I can go through an entire bag of chocolate in an afternoon, so not the healthiest thing to do. And I but my wife has to hide stuff from me because I'll eat everything in the house. So, anyways, like I said, hope everybody had a great weekend. Hope got to do some fun things, go outside, whatever your favorite activities are. I got to spend a lot of time outside with the dogs, letting them, the younger one chase the ball around and soaking up some good sun. And pretty nice. Didn't do a whole lot. Like I said, last week or last Friday, took the wife out. But other than that, stayed home, didn't do a whole lot, did some laundry and cleaned out the boiler room where we're going to have everything ripped out and put back in later this week. So that's exciting. Anyways, if it's your first time watching, please, subscribe and give me a thumbs up and share with those that you think might get something from my mindless ramblings. So, all right, well, let's go ahead and take a peek and see how the markets did today. Dow Jones was down 0.11, closing at 34,411. S&P 500 finished flat. It was up 0.06, and that's in the number, not the percentage. NASDAQ was down 0.14, closing at 13,332. Small caps were down 0.84. The VIX receded today 2.33%, down to 2217. All right, moving over to the other exchanges here in the Americas. Canada was up 0.1. Brazil was down 0.64. Mexico is flat at down 0.02. Moving over to Western Europe. Germany was up 0.62. The UK up 0.47. France up 0.72. The euro was up 0.54. Let's see. Got lots of greens. Nothing over 1% until we get down to Sweden. They're down 0.25%. Was this? Denmark was flat. The 2 Russian exchanges were down 3.4 and 3.07 for the MOEX and the RTSI. Again, more mixed. Hungary was up 0.82. Turkey up 0.64. Israel up 0.15. Saudi Arabia up 0.37. Japan was down 1.08. The other Asian markets, Australia was up 0.5%. New Zealand was flat. The Chinese markets were mixed. The Shanghai was down 0.5%. The SE component was up 0.37. The China A50 was down 1.23%. The DJ Shanghai down 0.54. And the Hang Seng was up 0.67. Taiwan weighted was down 0.62. So, all right. So looking across the day, kind of a mixed day all in all. Even here in the U.S., markets were up. I don't know. The Dow was up 100 points at one point, maybe 2. Wasn't really paying that close of attention to it. Just watching it slid most of the day. And then, like I said, the Dow finished down 39 points. All righty. So good, interesting stuff there. Let's go ahead and jump into the weekly economic update for this week. All right. The week on Wall Street, stocks posted losses in a holiday shortened trading week as the first quarter earnings season kicked off and investors digested new inflation data. The Dow Jones Industrial Average declined 0.78, while the S&P 500 fell 2.13, NASDAQ dropped 2.63, and internationals lost 1.2. Watching bonds, stocks began the week moving lower as bond yields climbed higher, with growth stocks suffering some of the steepest declines. Investors considered China's ongoing lockdown, worried it might worsen supply chain issues. Historically, high consumer and producer price inflation reports were shrugged off by the stock and bond markets in the main, with bond yields slipping despite the hot inflation numbers. Despite an encouraging start to first quarter earnings season, stocks pulled back on Friday at probably Thursday. The market was closed on Friday. As bond yields resumed their move higher ahead of a 3-day holiday weekend. An eye on inflation. On Tuesday, March's Consumer Price Index report offered little indication that inflation may be moderating as prices increased 8.5% year over year, the fastest pace in 40 years. Core inflation, excluding food and energy prices, recorded a 6.5% jump, the steepest rise since August of 1982. One encouraging note was that core inflation showed potential signs of ebbing, posting monthly increase of just 0.3% versus expectations of a 0.5% increase. The following day, March's Producer Price Index, a potential insight into future inflation, rose 11.2% year over year. March survey by the National Federation of Independent Business released earlier in the week indicated that half of respondents were likely to raise prices in the next 3 months. So not good. I know there was a lot of chatter, things I was seeing on the interwebs last week that was saying that inflation is slowing down, that it's going to get better. Well, until the producer prices start to slide or at least slow down, I really don't see that the overall inflation is in any place that's really going to slow down dramatically anytime soon. And do you think any of these prices are going to go back to pre-2020 prices? I don't think so. All right. This week's economic calendar, we have on Tuesday, we have housing starts, and Wednesday, we have existing home sales. Thursday is jobless claims and the index of leading economic indicators. Friday is the Purchasing Managers Index Composite Flash. Got a bunch of companies reporting earnings this week. Today, we have Bank of America and JB Hunt Transport. Tomorrow on Tuesday, we have Netflix, J&J, IBM, Lockheed Martin, and Prologis. Wednesday is Tesla, Procter & Gamble, Lam Research, and CSX Corporation. Thursday is AT&T, United Airlines, Snap, Blackstone, and Union Pacific. Friday, Verizon, American Express, and Kimberly-Clark. All right. Well, that's everything for the weekly update. The Retirement Insight newsletter is going out this week for folks who are on my mailing list. So I'm going to read just through one of the paragraphs here. It's titled "A Spring Cleaning for Your Retirement Strategy." Spring cleaning, you tidy up, organize, and put things in order. You can take a spring cleaning approach to your retirement, just as you can with your home or your garage. It may be helpful, especially if your retirement seems near. This is a good time for you for a review of your retirement accounts. As you get older, you may want to accept less risk in those accounts, and specific business, career, or life events might mean considering adjustments to your retirement strategy. Some people have old retirement accounts from previous jobs. There might be benefits to consolidating them, less paperwork when your retirement transition happens, and perhaps more accessible summary or analysis of your financial position. If you get a sense that there's an old retirement account that could work harder for you, you may want to examine your choices. Once you reach age 72, you must begin taking required minimum distributions from retirement accounts such as a 401k or traditional individual retirement account. Withdrawals are taxed as ordinary income, and if taken before age 59.5, may be subject to a 10% federal income tax penalty. All right. Also, there's a recipe here for vegan blackberry cobbler. Sounds delicious. Not going to go through that. And as far as vacationing with grandkids, if you want to read through what some best tips are there, feel free to read through it at your own leisure. All right. Let's go ahead and read through a few articles here. The first one is just a recap of today's market. S&P 500 struggles for direction as earnings parade continues. Let me shrink that. The S&P 500 struggled for direction Monday as investors digested the latest wave of quarterly earnings, including better than expected results from Bank of America. Bank of America delivered second quarter results that beat on both the top and bottom lines, led by a strong trading growth and pickup in lending, sending its shares up more than 3%. Bank of America Chief Executive Brian Moynihan talked up the prospects for the bank's lending business, forecasting, quote, significant net interest income improvement through the next several quarters, end quote, as the Federal Reserve is expected to step up the pace of rate hikes in the next few months. The positive remarks helped allay some of the fears about the shape of the consumer after JP Morgan's quarterly results last week stoked concerns about loan losses. Banks were also boosted by a surge in Treasury yields as the 10-year Treasury yield inched closer to 3% in anticipation of aggressive Fed monetary policy tightening ahead. Other major Wall Street banks, including JP Morgan, Goldman Sachs, and Morgan Stanley, were up more than 1%, more than offsetting a slip in the Bank of New York Mellon after the latter reported a miss in Q2 revenue. Big tech continued its struggles to find its footing as investors' appetite for growth sectors of the market continued to be hindered by surging Treasury yields. Twitter, meanwhile, continued to dominate investor attention, rising more than 5% after the social media company launched a limited duration shareholder rights plan, or poison pill, to thwart Tesla's CEO Elon Musk's bid to take the company private. Boy, people are pissed on Twitter. The blue-haired freaks, I bet they're just jumping up and down, stomping mad that someone's going to potentially allow people that they don't like back on their platform. It's terrible. The limited duration shareholder rights plan would allow other shareholders to buy shares of Twitter at a discount, diluting Musk's stake if it reaches 15%, which is the threshold for triggering the so-called poison pill, making it expensive for him to acquire the company. In China tech news, ride-hailing firm DD Global Inc. fell more than 16% after reporting a decline in fourth quarter revenue. Energy was the top performing sector of the day, up more than 1%, as oil prices continued their advance amid fresh supply concerns, already heightened by a prospect of a prolonged Russia-Ukraine war exacerbated by Libya cutting production. Valero Energy, Phillips 66, Coterra Energy were among the top gainers in the energy sector. So, yeah, it's like I said, going back to the whole Twitter thing, it is a bit humorous. I mean, I'm sure there's a lot of people who own Twitter stock out there who probably don't want to have their positions diluted if Elon attempts to continue to gobble up shares. So, in the end, I think Twitter's going to lose this battle because Elon's got more money than God right now. All right. Next article: oil up for the fourth day in a row as Libya outage adds to Russia supply squeeze. Oil prices rallied for a fourth straight session on Monday as production outages in Libya added to the upward pressure in the market, where a European ban of Russian oil is expected due to the festering war in Ukraine. Bloomberg reported that the Sharara field in West Libya was closed after protesters gathered at the site demanding Abdul Hamid Dabora's ouster. The closure came after the nearby EI field deposit for oil was halted for the same reason. Global crude benchmark Brent settled Monday's trade up $1.46 or 1.3% at $113.16 per barrel. Brent rose 8.7% last week after two back-to-back weekly losses that left it down by 13%. New York traded U.S. crude benchmark WTI finished up $1.26 or 1.2% at 108.21. WTI closed up 8.8% last week after the 13% tumble over the previous two previous weeks. Quote, it was another risk to the oil supply that rallied the oil market, end quote. Phil Flynn, analyst at Chicago's Price Futures Group, said, noting that China's continued lockdown of its Shanghai city over COVID raised questions about energy demand in the number 2 oil importing nation. Bloomberg reported that Libya's crude production has averaged just over 1 million barrels a day this year, down almost 1.2 million in 2021, or from almost 1.2 million in 2021. The drop is costing the country millions of dollars in lost revenue. The S&P Global reported the 70,000 barrels per day EI oil field was closed on April 16th after protests demanding the ouster of the country's prime minister, Abdul Hamid Dabia. Libya's National Oil Corporation, or NOC, said on its Wednesday website that, quote, production has stopped completely, end quote, as of April 17th, making it impossible for it to meet contractual obligations. The NOC has called on all sides to preserve what's left of the, quote, already dilapidated and worn out infrastructure after years of civil war. Adding to Monday's rally was tough talk from Iran on Israel. Reuters reported that Iran President Ibrahim Raisi had warned Israel against making even, quote, the smallest movement against Iran. The remark came on Monday as the Iranian military displayed homegrown weapons and defense systems marking National Army Day. EU government said last week that the bloc's executive was drafting proposals to ban Russian crude, although diplomats said Germany was not actively supporting a U.S.-style immediate embargo. But those comments came before tensions grew in the Ukraine crisis over the weekend, with Ukrainian soldiers resisting a Russian ultimatum to lay down arms on Sunday in the pulverized port of Mariupol. Moscow, which calls its actions in Ukraine a special operation, said its forces had almost completely seized the city, providing no signs of a ceasefire. The International Energy Agency had warned that roughly 3 million barrels daily of Russian oil could be shut in from May onwards due to sanctions or buyers voluntarily shunning Russian cargoes. Russian oil production has continued to slide in April, declining by 7.5% in the first half of the month from March, the Interfax news agency reported on Friday. So if you were hoping your gas prices were going to recede anytime soon, I don't think that's going to happen. All righty. Next up, we got an article here from First Trust, slower growth in Q1. This is written by Brian Westbury, their chief economist. All right. Real GDP in the U.S. grew 5.5% in 2021, the fastest growth for any calendar year since the Reagan boom in the mid-1980s. In spite of this, for the 2 years ending Q4 2021, real GDP grew just 1.6% annually, which is below its pre-shutdown trend. Because of the shutdown and government actions, growth has been uneven. Goods consumption is up 7.5% at an annual rate in the past 2 years, while services consumption has declined 0.4%. Thanks to a boom in investment during the second half of 2021. Investment, including inventories and home building, is up an annualized 5.9% during the past 2 years. These uneven growth rates will start to balance out during 2022 and beyond. And in the first quarter of the year, we are tracking a real GDP growth rate of 1.5%, although our forecast may change based on reports to be released in the next week and a half. The bottom line is that this is a far cry from the stellar growth of 2021, but not a recession either. We expect growth will be a little faster in the second quarter, but again, not nearly as fast as in 2021. Right now, the U.S. economy is in a battle between forces boosting growth and forces dragging it down. What's supporting growth? First, continued reopening from COVID-19. Americans are still in the process of returning to normal, but we're not completely there yet. Second, monetary policy is still very loose. Even if the Federal Reserve raises rates by 2.25 percentage points this year, real interest rates will still be negative and monetary policy will not be tight. Third, tax rates remain relatively low and are likely to stay that way. Major transformational legislation seems unlikely. Well, unless you're making like over $80,000 a year, then your tax rates start to really pinch into how much you make. If you're below that, maybe not so much, but anything over that, you're just getting pushed over a barrel and poked in a place you really don't like it. Put it all together, positive and negatives, and we're forecasting about 2.5% real GDP growth this year for Q4, with slower growth rates in 2023 and 2024 as monetary policy gets tight and the benefits of getting the economy back open will eventually run out. In the meantime, here's how we get to our 1.5% real GDP growth forecast for the first quarter. Consumption. Car and light truck sales jumped at 44.2% annual rate in Q1, while real inflation retail sales outside of the auto sector rose at 5.3% rate. And it looks like real services spending should be up at a solid pace as well. Putting it all together, we estimate real consumer spending on goods and services combined increased at a moderate 3.8% annual rate, adding 2.6 points to the real GDP growth rate, 3.8 times the consumption share of GDP, which is 68%, equals 2.6. Business investment, we estimate 11% growth rate for business equipment investment in the first quarter, with commercial construction unchanged and investment in the in intellectual property rising at a typically strong rate. Combined business investment looks like it grew at an 8% annual rate, which would add 1 point to the real GDP growth. 8.0 times the 13% business investment share of GDP equals 1. Home building, residential construction looks like it accelerated to a 6% annual rate in the first quarter, with demand for new housing and improvements remaining strong. A growth rate of 6% would add 0.3% to the real GDP growth. Government, remember, only direct government purchases of goods and services and not transfer payments like unemployment insurance count when calculating GDP. We estimate federal purchases shrank at a 0.6% annual rate in Q1, which would subtract 0.1% from the real GDP growth. Trade, imports have continued to soar in the first quarter, while exports have not grown as quickly. As a result, the trade deficit is likely to expand significantly, which if you've been had a meeting with me recently, I know I've talked a lot about that. At present, we're projecting that the increase in imports relative to exports will subtract 2.3 points from real GDP growth in Q1, although a report on the trade deficit in March, which arrives on April 27th, may alter the forecast. Inventories look like they grew at almost exactly the same pace in the first quarter that they did last quarter of 2021. And if we're right, that would mean inventories have zero net impact on GDP in Q1. Add it all up, we get to a 1.5 annualized real GDP growth for the first quarter. Look for continued growth in 2022, but not nearly as fast as 2021. So things are getting better. If we could get rid of our federal government, I think the world would move a lot. I mean, I imagine the rest of the world would be pretty happy if the U.S. government disappeared because, especially if you live in the Middle East, there wouldn't be drones and stuff flying over your head, dropping bombs on you. All right. And one last news article. This came out today, and it might be good news for some people and bad news for others. Bet you can tell which way I feel about it. U.S. judge overturns mask mandate for airplanes and trains. Federal judge in Florida said on Monday a U.S. mask mandate on public transportation is unlawful, overturning a Biden administration effort to reduce the spread of COVID-19. I honestly don't think any of those rags on people's faces had any effect. You know, if you want to wear a mask, go ahead and do it. I don't care, but you're not forcing me to do anything. So, and if you're going to wear a mask, wear a real one, a respirator, goggles, COVID gets in through your eyes, dumbasses. Last week, U.S. health officials extended by 15 days the mandate requiring travelers to wear masks on airplanes, trains, and taxis, rideshare vehicles, or transit hubs, saying they needed time to assess the impact of a recent rise in COVID cases. The ruling by U.S. District Judge Catherine Kimball Mizell, an appointee of President Donald Trump, I'm not sure why that matters, came in a lawsuit filed last year in Tampa, Florida by a group called Health Freedom Defense Fund. Judge Mizell said the CDC has exceeded its authority with the mandate, had not sought public comment, and did not adequately explain its decisions. The judge sent the issue back to the CDC. It was not clear whether the judge's order would take immediate effect, and the Transportation Security Administration's order for the mask mandate appeared to still be in effect. The TSA and Federal Aviation Administration declined to comment. The White House and Centers for Disease Control and Prevention did not immediately comment. Yeah, of course not. Bunch of government cowards. The CDC first issued a public health order requiring masks in interstate transportation in February of 2021. The TSA issued a security directive to enforce the CDC order. Industry groups and Republican lawmakers had wanted the administration to immediately end the 14-month-old mask mandate last week. The ruling could create confusion on airplanes where the mask mandate has caused a surge in incidents and altercations between airline officials and enforcing the mandate and passengers rejecting the demand they cover their faces. The FAA said that since January 2021, there have been a record 7,060 unruly passenger incident reported, a 70% involved masking rules. After the ruling, Sarah Nelson, president of the Association of Flight Attendants, urged calm and consistency in the airports and on planes. The last thing we need for workers on the front lines or passengers traveling today is confusion and chaos. Airlines for America had last week urged the Biden administration to lean into science and research, which clearly support lifting the mask mandate. It makes no sense to require masks on planes when masks are not recommended in places like restaurants, bars, or crowded sports facilities, end quote. The group, which represents major U.S. passenger airlines, did not have an immediate comment on Monday's ruling. The U.S. Senate voted 57-40 last month to overturn the public health order requiring masks on airplanes and other forms of public transportation, drawing a veto threat from Biden. So good news there. Again, if you want to be extra careful and wrap yourself in a trash bag every time you go outside, feel free. I need someone to laugh at when I'm out and about. So, mocking idiots is my favorite thing to do. So just ask my wife. I mean, she hears my commentary all the time. Anyways, all right. Well, that's everything I had for today. So I hope everyone has a fantastic Monday evening. I'll be back tomorrow with the Liberty Call. And if anyone needs anything from me or you'd like to reach out to me, go to dsafinancialgroup.com. All my contact information is there. And feel free to send me a note or a comment. Otherwise, have a great evening, and I'll be back tomorrow. Bye.